So I thought I'd start off with a simple video, how to invest in stocks and shares, a simple guide to increasing your wealth. Most people think the stock market is really complicated and, I shouldn't get involved in this and things go up and down and I might lose money and all sorts of things. But in actual fact, it's very, very simple and straightforward. So let's give you some ideas to get started. And in future videos, we'll run through some of the more deeper details of finding the right companies to invest in. So rule number one, I think, for me is to invest in companies you know and understand. So ideally, you really want to pick just sort of 6 businesses or so to go and study and learn more about. But these businesses can be companies that you're buying from on a regular basis, or products you're using even around the home, used for years, and they're very sort of trustworthy to you, and you understand them as a business. So really quite key, just have a look down the high street. I mean, obviously, probably things are pretty close at the moment, but as we go on, look at stores that you're shopping in regularly, and look how busy are they? Are they taking a lot of money, or are you walking past stores and thinking, well, there's no customers in there and they're not doing so well at the moment? Look for new trends for stores that are opening and new chains that are expanding, and really try and think, can I get in at the early days and grow along with this business? Spot the trends and keep your eyes open. In my very early days of investing, I'll go back a long way. I think we're talking about this is about really sort of macro events. This is things that are happening in the news. And many years ago, when the HIV crisis hit, this is in the 1980s, and there was major panic going on over that time. And it was one of my first investments into the stock market. And I thought, well, really, what's going to grow? And I invested money into London Rubber Company, who make condoms, which is a sort of nice little fast rise as the stock market caught on to the fact that, people are going to be buying a lot of those. And the price absolutely soared over the first few months. And I took a nice little profit. And that was one of my first forays into the stock market many years ago. So look at what's happening in the news as big events occur, and sit and think about, well, what are the implications of those events and what's likely to be affected, either positively or negatively? What are people going to start buying a lot more of? What are they going to need? Is it going to change the way that businesses are working? Is it going to affect the way that people are working and what they're doing and where they're travelling and all sorts of things? Or are they going to buy a load of toilet roll and pasta? One of the key factors in the stock market is to buy the fear and sell the greed. The stock market is very, very emotional, and a lot of buyers out there, they're buying on emotion. They're not buying on logic and common sense. And you might think, well, no, they study these really hard. Well, not necessarily. And there's an awful lot of that, particularly at the moment on certain companies, where the pricing of that shares bears no relation to the actual true value of the business. But people are worried about missing out, and they're buying in, and that creates massive bubbles which can explode and collapse down to nothing, as we saw in the dot-com bubble of the 2000s, where people were buying shares in a website, basically, which was worth nothing, and paying an absolute fortune for it. So here I'm having a look at the FTSE 100 over the last year, where we can see back in January, February, things were really hitting a nice big high, and then Rona hit, and the stock market took a very big plummet over about a 3-week period to hit a low, and then surprisingly has sort of really well bounced back, not all the way up, but you can see all these ups and downs of the charts. The prices are rising and falling pretty much on a daily basis, as if reflecting the market of 100 of the top UK companies. There are different markets around the world for different stock markets. So the S&P 500 and NASDAQ in America. NASDAQ is more the tech stocks, and other markets around the world. So for the UK market, though, we've seen a fairly fair recovery there. The markets can go up and they can go down. So buy the fear. Buy the fear is right back here at the peak of the first wave of Rona, when the share price across the whole of the market, the majority of shares took quite a hammering and the prices came really down low, and that's really the time to buy. As the market rises and rises and rises up to a point where none of the shares are really on sale, and there may be another drop in the market coming, then that's the time to be selling out and taking a profit. So really, one of the major things in the stock market is you need to be patient. It's not a matter of rushing into anything, and you need to wait for the shares to go on sale to buy them. So think of it a bit like buying a car is a good example, maybe a second-hand car, and you can see the sticker price on the window, but is that the price you really want to pay? Now, in the stock market, bizarrely, when things are very high, people are paying a lot more than the sticker price of the product. A good example of that, when there's more of a demand for something, but there's a scarcity of it. Think of every time that Sony launch a new PlayStation. We've got PS5 at the moment, and people then sort of buying them where they can, putting them on eBay and making a fast profit and selling them for far more than they're actually worth. But if you wait for there to be, as they call, blood on the streets, and the prices are nice down low, and that share of fundamentally a good business is on sale, then that's the time to buy. So you wait for the sales. Also need to think long term in the stock market. Now, there's a whole variety of different trading strategies out there, from what's called the day trader, who look at bar charts all day long, and they're essentially gambling on whether a price of a share is going to rise or fall. Some of it's, very little is done on technical analysis. It's done purely on what the emotional whim might be feeling, and for novice investors, it's really well worth avoiding like the plague, because it's the fastest way to lose an awful lot of money. So stay away from it where you possibly can. On some platforms, you'll see it come up as, say, on Trading 212 as CFD, which is like cash for difference. So you're trading on the up and down of the share, not actually owning the asset itself. But investing is all about buying the asset. You're buying into the company. You're buying a share of the company, and you are working on the basis you bought it at the right price, and it's a business that's fundamentally strong, and it's going to grow in the long term. It hopefully will pay some dividends along the way, or just the share price will continue to go up because the company is growing, and really will earn money for you in the longer term. So Warren Buffett, one of the greatest investors in the world, describes it as buying a farm, buying a share in a farm. That farm is going to produce crops every year, and hopefully you'll improve the yields out of the fields over the years and add some barns on and maybe buy some extra acreage and different bits and pieces. And then maybe one day you'll eventually sell the farm when it's worth an awful lot more money than it was when you bought it many, many years before. But it's also important in the stock market to keep some cash aside for a rainy day. If you find yourself looking at share prices every 5 minutes and you haven't got any other money in the bank, and things are a little bit tight, and you've got nothing else to fall back on, then that's probably not the best position to be in. But you also need cash for the rainy day, because the stock market can go up and down. And if you feel the market is quite high and there may well be a crash or a market correction coming and an opportunity to buy more shares, you need to have the cash sitting there to be able to do it.